Hey, folks, I just wanted to go over Apple and Microsoft. I'm seeing something inside the chart there and wanted to share it. Of course, at the end of the presentation, please review our disclosure. This should be fairly quick. All right, so the alarming part of this look is we have a clear two drive. Really, it's out on our monthly. So this is drive one confirmed, drive two confirmed. And, 50% back is 298.68. However, our prior corrective leg, just our leg one, is pretty aggressive. That puts us down, around the 23 fib, which is totally viable here. Now I come in and throw in my Fibonacci extensions with our Bollinger Bands, and we're broadening here. So we definitely did not have the type of squeeze that we had here to the upside. We're not squeezing now. We're now rolling over, and that's troubling. So, looking at, our patterns, just doing an auto scan of our time frame here, this could clearly be a flat back down to the 8-day. Now, where that conviction comes in, we have this support band, which really came in off of this low, this back test prior to where we got euphoric. So, we get to the base of this band, October 21 support around 289.10. Then, I think we're looking at some continuation, just because that's also where we took off in this last push, which we don't have here. We don't have a push. So, that breakdown is concerning, and I wanted to share that with you because that will bring in more overall market weakness. Now, jumping over and looking at Apple, we have a very similar look here as well, bringing in my Bollinger Bands with fibs as well. However, we're squeezing a little more with Apple, but this was price rejection here. We came off pretty doggone aggressive right there between Microsoft and Apple because we rejected our higher price where we would look at equality for that really to be a flat. So, 50% off of this leg is 168.85, which is below what my count two is now at 174.89. So I'm going to come in and sort of look at the same thing here. Where was our real resistance or support? What would I look at as far as a level that would be concerning to the downside? And there really are going to be two here. This is our resistance band off of our July 21 high, which really is the marker, but we have one more below there. I'm not saying we break down below this, but it's clearly not bullish to me. And just forgive me, I'm going to get this as close to as I can for this video. And then we have another resistance band that comes down around 145 to 131, right around the 8-day and the 200-day. And I realize the 8-day and the 200-day, we break below the 50-day, that's our next target. So we have this huge, what was resistance for us to get up and out of it. We broke out of it. We went right down and tested the bottom of it, got back up in the lower high end, and then we broke below support. So there's not a lot of buyers up here, except for we are squeezing on the Bollinger Bands. It does look, I'm just trying to find a spot where I would say, hey, that's a similar look. No, we don't really have a similar look. This is a little more of aggressive of a squeeze, and we broadened pretty quick. So, we could turn around, with some kind of market event to head us to the upside, but I'm more concerned about the downside, both in Apple and Microsoft, and how they overall weigh on the markets. But I wanted to share that look because, we want to watch this. We get below that 23.6 fib extension, on our bullish leg up in our count, which measures this entire super cycle leg down to our January 2019 lows and measures our January 23 lows and our January 22 highs. So that's a very large pattern we're looking at. And for me, even to get the inclination that we could draw down here with the other macro and micro things in play, aka rates, pressure on markets, and the fact that we had 3 consecutive quarters in Apple, and I just consider them, a huge dinosaur in this market. And even if Nvidia and Meta, even other tech stocks push, if Microsoft and Apple come off consecutively, we got some significant downside in the markets because it's going to spook the markets. So that's my 2 cents, folks. Great trading. Until next.